we have our speakers joining in now. Let me give a brief introduction of our speakers that are here with us today. I can see Mr. Rishi is there with us. Vibhor, hi, great to have you with us. Mr. Aman Kapoor, again, nice to see you on the session, and we look forward to hearing valuable views from you. And Gaurav, again, a lot of data points we will, I'm sure you'll be sharing with us today. We are waiting for our moderator, Mr. Neeraj Bansal. Let me give a brief introduction of our moderator in the meantime. The session is being chaired by Mr. Neeraj Bansal, who's the partner and COO India Global and Head Corridors for ASEAN, Hong Kong, KPMG in India. So that's quite a qualification we have here. And Mr. Bansal has over 23 years of professional experience, and he has played a role of a market maker through collaboration with ASEAN and Hong Kong member firms. And he has led more than 200 advisory engagements across various sectors. So a very competent moderator who will be chairing this session. Let me introduce our speakers in the alphabetical order. Mr. Aman Kapoor, who is the CEO for Airport Land Development, GMR Airports Land Holdings, and we all know GMR is into a lot of segments from infrastructure and land development to airports and energy. Mr. Kapoor, especially, he has a demonstrated history in the real estate and land development business, and he has held leadership positions in large multi-use real estate developments. And let me tell you, he's very skilled in negotiation and business planning, and as well as feasibility studies and asset management. Neeraj, a warm welcome to you. I'm just sharing the introductions of our speakers. Our next speaker is Gaurav Karnik. He is the real estate national leader and tax partner, EY India. Again, he has been advising several real estate developers and private equity funds in structuring their India-centric real estate funds, and he's also actively involved with central government on policy matters related to real estate sectors. So a lot of inputs we are looking forward to from Mr. Gaurav Karnik. Khair Nissa, she will be joining in few minutes. Ms. Khair Nissa is Executive Director for World Trade Center, Noida, GiftCity, and she's also looking at Faridabad, Surat, Amritsar, Patna, Ahmedabad, and Lucknow World Trade Centers. She is in fact on board of World Trade Center Association, and she's working closely with government of UP, Gujarat, Punjab on policies related with fostering investments and building destinations as business magnets. Clearly what we are now looking at ahead in 2021 to build commercial centers in India. Rishi Raj, our next eminent speaker, he is the Chief Business Development Officer, Max Ventures and Industries Limited. He has 20 years of experience in research, analytics, consulting, and corporate strategy, and is responsible for strategy, growth, and new business at Max Ventures. So he will be giving us the developer's point of view and what exactly are we looking at when we are talking about commercial real estate development. Mr. Vibhor Jain, who's our next speaker, he's the head for North India, Cushman and Wakefield, and Vibhor coordinates multidisciplinary operations amongst verticals overseeing service delivery standards, building execution strategy, and enabling rapid and sustainable business growth in North India. He has over 17 years of experience, and he will be sharing that experience with us today. So thank you all for being here with us today. Neeraj, we can start with the session. Khair Nissa is having some technical problem. She'll be joining in just a few minutes.
Sure. Thank you, Sapna, and good afternoon, everyone. Sapna, am I audible well?
Yes, we can hear you.
Okay, yes, wonderful. So good afternoon, everyone, once again, and welcome you all to the session. I'm truly glad to be part of today's panel discussion. A very warm welcome to all of you. It's always a pleasure to be amongst industry friends and colleagues, especially even more during these COVID times. Khair is joining us, but when we were having a chat just before this panel session, she had made a remark that how much now every one of us is meeting not wanting to miss out on any opportunity for meeting people. So I think all of us share the sentiment while we are virtual, but we would try and see that we are able to give you certain takeaways and information. We've got a a very strong industrial panel, illustrious panel for this today's session there. So, in today's session, we would discuss around the Delhi NCR office market. As you said, I think from a panel perspective, we've got a fantastic panel today covering master developer, corporate developer, and industry professionals as well. In terms of when you look at the commercial office realty segment, it was truly the shining star, for the Indian real estate industry for last several years. And 2019 was a super year, when we saw the record net absorptions in all the top 7 markets in there. Almost like 40 million square feet of net absorption was noticed, which was like about 19% higher, than before. And truly, none of us had imagined that just in a few months, real estate strategy for various organizations would be turned on its head. And instead of long term, as it should be, we will start discussing it in a more in the short term. In the Q1, especially, I think the buzzwords were more in terms of termination, reduction in space, renegotiation, waiver, and force majeure invocation. Those are the words that you were kept hearing, and those are the conversation also happening all across there. But recently, clearly in terms of after the some movement that has happened in terms of realization of the fact that there is a lot of fatigue from work from home catching up, and also in terms of the post-vaccine world also, given the current news that is coming in, which seems now a more near-term response.
I think we've lost Neeraj.
Yeah.
No matter how much we become and consider, technology and webinars, we always have these things happening.
Correct.
And this makes me an optimist that work from home is not going to last for long.
So I think maybe in the spirit of continuing, while Neeraj is getting through the connectivity issue, can we? One of the largest and most emerging players in NCR office market is Max Group, and we have Rishi Raj on the panel here. Rishi Raj, how has been your experience during this COVID? You have some fantastic development in Noida, and I know you're developing in Delhi. How have you experienced during COVID, and then what is your projections for post-COVID world?
Yeah. Hi, Aman. Hi, everyone. Overall, we continue to remain very optimistic and bullish as far as commercial real estate office is concerned, particularly Delhi NCR. From a mid to long term perspective, I was reading a few statistics from Edelweiss, which compared upcoming supply to trailing 12-month demand. And what it showed us was, if you look at the market from a demand supply equation in together, Delhi NCR and Mumbai were much better placed than some of the cities in South, for example, Hyderabad, Bengaluru, where Delhi NCR was in the ratio of 2 to 4x and Bengaluru, Hyderabad were in ratio of 4 to 6x. Clearly, I think from a demand and supply equation, Delhi continues to be in a tighter spot, and we are very confident of it bouncing back pretty quickly and soon. I think we are observing a few trends in our Max Towers and in Max House, 2 office assets that we have developed. I think one, there is a trend of diversification where bigger with larger corporate real estate footprint, they're going for splitting their portfolio and opting for offices in 2 or 3 different parts, either hub and spoke or equal size offices in different parts of NCR to reduce the commute time from home to office. I think second and very prominent trend continues, which is there is relocation as well as consolidation to save cost. I think what we have observed is people are not looking to save cost, but move to a better quality building. And if you look at Delhi NCR, the supply of developed, managed, good quality buildings, which inspires confidence with respect to health, safety, hygiene, sanitation, overall well-being is limited. From that perspective, I think those developers and those buildings have not only been able to preserve their rentals, but have seen a lot of leasing happening, especially post June. In our case, we have been able to close 100,000 square feet in last few months, primarily because of this. Of course, we offered competitive pricing, but at the same time, the key driver was the quality of the asset which people are looking at.
Vibhor, you come from the consulting world. I'd like to hear your insights into how the NCR market is less impacted as compared to perhaps we are seeing in South. I mean, there have been news of many large transactions falling apart in South, but in Delhi NCR, lesser of that. I mean, there are few stories in COVID, and of course, I would like to hear your views, what you saw in the first sort of quarter of the COVID period, and what you are seeing in the next quarter, and how you see things emerging.
Sure, Aman. Hi, everyone. So, thanks, Rishi, for throwing a light on how the leasing activity has been in Delhi NCR. And Aman, great question. So Delhi, the way we look at Delhi is different from the South market. So South market is predominantly tech dominated, whereas Delhi is a multi-dimensional market where we see demand coming in not only from tech but from all the other sector, be it FMCG, be it is pharma or fintech, so managed office spaces, etc. So that is one big difference why you see that Delhi NCR as a market is less impacted. Secondly, in the difference between Bangalore and Delhi NCR, just to give you some statistics, the average size of a deal in Bangalore this year, which is YTD 2020, is around about 78,000 square foot, with around about 110 deals happening. On the contrary, Delhi, this deal is around about 250 square foot with around 700 plus deals happening. So you see that Delhi has a good mix and a fair high number of transactions which happens. Second factor, what where Delhi see real estate market moves differently, and as Max Group also just an example, and as Khair from a Noida perspective, how they have shaped up. Delhi NCR has Gurgaon, Delhi, and Noida as three dominant markets. In all these three dominant markets, they have their separate CBDs and SBDs. So it's not that only Delhi as a market is a CBD and Gurgaon and Noida is a periphery. Gurgaon has its own CBD, Noida has its own CBD. So the clienteles and the occupiers, they look at all these three markets differently, and there is a demand for all these three. And the last point, and to cover up what Rishi mentioned, that he has seen a lot of traction absolutely after June and the transactions happening. What we also hear is that when this pandemic started somewhere in March, when the news started happening, and April onwards, we saw a sudden reaction and a panic among corporates, and the more news of terminations were coming in. And June, July onwards, what we started hearing, it was more of news of renegotiations and renewals and talking about staying put strategy from the corporates. So I think it's a reaction which came from corporates that earlier, yes, we realize that work from home is not a long-term solution. We need to plan ahead of our office spaces. So that's what we are seeing, Aman, in Delhi NCR.
Aman, may I add here, on the CBDs that which Vibhor actually mentioned, like we have seen certain trends in Noida, we saw that Noida actually during this period actually has come up as a destination where corporates are looking at Noida. Earlier, we used to see a lot of resistance to Noida, but now we are seeing a lot of acceptance of Noida in terms of lower rentals, better infrastructure, good connectivity, availability of manpower. But at the same time, while CBD of Noida is very much in demand, but we've also seen certain sectors coming up, like the Noida Expressway, Sector 16, Sector 62. These have come up in Noida. At the same time, in Gurgaon, we have seen the golf course extension being the next place where real estate would come of age. We're seeing that in quarter 3. In fact, we are seeing a lot of and Dwarka Expressway. We're actually seeing a lot of queries for Dwarka Expressway, which at a particular point in time, we had seen a complete stop of being Dwarka Expressway being looked at. But now we're seeing that these are emerging sectors and emerging CBDs or PBDs that we could actually call them. Right.
As a
Great.
common
Welcome back,
person's
Neeraj.
perspective, let me add that, I think commercial real estate, everyone was saying it's going to go down or transactions will not happen. But I think our experiences during the webinars have told us, we are putting cart before the horse because we are not ready infrastructure wise for digital working. So Neeraj, over to you. We have, you are back with us.
Yeah, Neeraj, just I took responsibility while you were away. So my next question would be to Gaurav. I wanted to ask Gaurav on his views on how ready the Delhi NCR REIT market is, and how our commercial real estate is ready for REITs to happen in Delhi NCR. We've seen a few portfolios in South already being listed, and how does the NCR market look like?
Yeah, thanks, Aman. So I think two things which I wanted to just state before get to REITs. I think the commercial office story is clearly still, a story which is on. Yeah, I think this sort of slowdown or this fear that we all have today, I think that's temporary. It's a matter of time, in my view, that once the vaccine is out, we will have people come back to office in a large way. And of course, it may not be every day going to office or 5 days a week, given that everyone got used to the flexible working and with the hassles of traffic. What I do definitely see that maybe more offices coming up, smaller offices rather than having large spaces together. And the second part I would like to put is that it's not that we will move to tier 2 cities. I think NCR with Noida, Gurgaon, Delhi, these three are still very much on top of everyone's mind space. So if you look at multinationals, whether we look at outsourcing, India anyway as such is a very in a strong position on outsourcing. Our per cost employee is still the lowest. We have a strong STEM population which is there, English speaking on top of that. So I think combined point is that the outsourcing will continue. I think the story may get stronger post the pandemic from what it was pre-pandemic, because I think there will be a lot of outsourcing from various countries. So that's a couple of things of being optimistic. And we also, as a consulting firm, and Neeraj was there on the call, but from a perspective of consulting, I think clearly there is a need of having face-to-face interaction, and that interaction of a meeting of the minds happens more better when we collaborate. So I think we are still optimistic on the office space. So coming to your question on Aman on the REIT, of course we've had the two very successful REITs which have happened. Both Mindspace and Embassy, they both are doing well. Embassy, in fact, have done a couple of more transactions to add to their portfolio. So the REIT is not just an exit vehicle, but one which grows with growing, collecting more completed assets. So from a global investor perspective, the great part of the REIT is that they see an exit in sight. If we went back to 2005 and you had foreign investors when it started coming in, clearly they put in a lot of money, but there was no clear sight on how we're going to exit. Now with the REIT story out there is an exit story which is possible, and I think even the Indian markets have receded well. You can see the returns which are coming out, and you can see the demand which is there. In after that, the other point to be seen, there are a couple of more REITs, as you may be aware. A Canadian backed sponsor is going to put in the office assets in December or Jan, and will be followed by DLF and GIC's joint venture, which is there with the Gurgaon assets and the other assets which they have, primarily the NCR region. So clearly, REIT is a story which is here to stay, and they are performing well. They're in fact performing better than the government rate right now. So there are all the points which point towards clearly that the REIT is there here to stay and will be looked upon and as a route for people to monetize the assets. And the other point I think which would be interesting is that today we are seeing only private developers put up REITs or completed assets into the REIT. But another potential which could be there is for government, which has a number of assets, and they could look to monetize these assets to the REITs, and that could very well happen, given that they have large plans of privatization where we'll limit the number of public sector units in a particular sector. So once they start privatizing or moving in that direction, then they would have to monetize assets, and the REIT gives them a pretty stable way of getting out of it. Because the point is that in the REIT, it's not that you sell your assets and you're out. You can have what you call a sale and lease back, because the REIT basically has to generate returns and has to have a rental yield. So therefore, clearly it's not like you build an office and you exit it, at least from a government or anybody else's perspective. So there's a lot of potential there. And today we're talking only about commercial assets being in the REIT, but I think going forward, you could very well see things like warehousing assets being put into REIT. Retail story right now is weak. Some of the REITs already have some retail malls in it. Good, but if things pick up, I'm sure that will also become a separate REIT asset on its own. Followed by the data center story, which I'm sure Rishi and Khair will talk about as we move forward. But that's another asset where we see REIT
Gaurav,
happening.
where
Thanks,
is
Gaurav.
the capital? I mean,
Yeah.
when it comes to capital infusion, we've seen largely dominated by 5 or 6 fund. Whether it's the 2, 3 Canadian fund, then the Singapore-based GIC, and it's been sort of largely dominated through these five sort of entities. Are you finding other pools of capital that are now starting to look at India, perhaps being awoken by the COVID world and having to diversify? Are there any new, sort of new entrants into the investment market in India that you are seeing?
Yeah, so you're right. Currently most commercial asset transactions in the last 2 years have been, dominated by 2 or 3 players. What we do see happening is that, now we see a number of the other pension funds following, the lead taken by some of the other Canadian investors, for that matter, getting into real estate. Or for that matter, we see some of the European insurance majors also trying to, put in money into the Indian real estate market. And I think what is interesting to note is that there are still, a number of platforms being formed, and we have seen some from the Asian markets trying to set up platforms. The platforms are clearly for commercial assets, and it's also including development to core. So it's not that they are looking only at buying ready-made assets, but they're willing to put in money to kind of build up these commercial assets and rent it out in the future. So from the global investors' perspective, I think yes, the point is that it is the pie is increasing from an interest perspective as well as deployment of money from various countries. And the good part is that people are ready to put into development to core, which is an interesting factor.
Maybe Aman, just one quick fact with respect to REIT, given the focus on Delhi NCR, I just thought it would be important to call out. When you look at Delhi NCR from a readability perspective compared to other markets, I think one of the challenges that Delhi NCR has, which is the situation today, which I'm sure will change and will have a more potential in future, is a large proportion of stock in Delhi NCR is strata sold. If you look at Noida and Gurgaon, 40 to 60%, depending on which micro market you look at, is strata sold. And if you look at the non-strata sold component of Delhi NCR, is if you exclude DLF, is highly distributed among several developers.
Sure.
So I think from a portfolio perspective, there is certain weakness when it comes to Delhi NCR particularly, but this is, at least people like us see this as a huge opportunity to bring in good quality developer-owned, developer-managed assets and shift this trend towards what we see in other parts of India.
Thanks, Rishi.
Yeah,
I think
very well
Mr.
said.
Bansal is having problem with connection, so I'll take up the questions. He has shared very detailed questions, and in fact, for Mr. Aman Kapoor, there is a very interesting question Neeraj has mentioned about work hospitality. So while we know hospitality, work hospitality is also an emerging trend that we are looking at. So how are you? Have you? What's your views on that? Is
Well,
it
there are
something
a
that
few.
we are going to see?
These are all new terminologies. I mean, the other day, I in one of the meetings, somebody used the word quarantability. So, so hotels, these days are being used for several uses, including quarantine, including doing a remote office location because you're not really going to the office or work out of a hotel room. So lot of the executives that are not at home but are probably stuck elsewhere. Are so AeroCity. Many executives who've come from other foreign countries to work in India find themselves parked in hotel rooms in AeroCity. So I mean hotel industry is gone through a sea change. As you know, the occupancies are down considerably, although hotels that are near to the airport are seeing better occupancies now as business travel has marginally started to improve and airlines have started again, and then therefore crew etc. are populating some of the hotel rooms. So these things are as of right now, airport hotels tend to do better than city hotels. And But I think hospitality industry across our nation is doing some very innovative stuff to basically provide a remote working location, as well as an opportunity to and the infrastructure to do e-meetings, etc. So hotels have done phenomenal work in that direction to be able to sustain occupancies. What we are seeing in hotels also is a trend that business hotels tend to do are weaker in occupancies right now, and leisure hotels. Many of our executives have actually gone to leisure locations for 2 month long staycations, and they're parking themselves with families. They're taking Airbnbs in Goa and up in the hills, and are parked with families, isolated but yet working from home. So it's an all new world. I don't know if it'll continue forever, uh, uh, but but certainly hotels have been very innovative and have quickly adapted, and we are seeing that trend across. And I think as I think the work environment post COVID era obviously will look very similar, but I think it will provide a tremendous amount of flexibility to the workforce to be able to, both from employer perspective and the employee perspective, that just because you're not coming to office, it doesn't mean you're working. And I think that philosophy of a employer-employee relationship, I think that's going to change. I think no longer you have to take a day off because you have to see a doctor, but you can see the doctor remotely, one, and even if you have to see the doctor in person, you can still work from home the rest of the day. So I think what you'll see in the workforce is a much better employee-employee relationship. So the bad side is that COVID happened. The good side is that we've all gone through this sea change in attitude, COVID has made the most unflexible people more flexible, and
Mr.
that so while we saw work from home was very easily adapted even 10 years ago by the multinationals and by technology companies, but the local Indian companies were still very backward in their thinking. And I think what you'll find is a culture change in these organizations.
Mr. Kapoor,
So,
you
so
have
on
taken
that,
away one excuse that we give to our bosses. We can't attend work. So, and Neeraj,
so
he was, Mr. Aman
Sapna,
Kapoor was.
on this, just want to add a very important point what Aman just said on the work hospitality. So, what we feel is that once we are over this pandemic, we will see the change in office designs, which will reflect more collaboration and more, what we are talking about, work hospitality, more active spaces. So we all learn from what all happens in the universe, and from this pandemic, this will be one new learning for all the organizations. And ultimately, same what Aman said, that the relation between an employer and employee will change, and you will start seeing that reflection in the design of the new offices.
One more trend globally in the World Trade Center fraternity that we are seeing, is that a lot of the World Trade Center is a combination of real estate and services. And what we are observing, a trend in the World Trade Center when it comes to real estate, is that airports are considered to be the preferred destinations for World Trade Centers. Maybe it is the airport scenario being looked as destination, or they coming up as destination and having mixed use development with hospitality and work office space being there and being well connected. So this year we have seen at least 10 such World Trade Centers coming up, and mostly in an airport locations. That's the global trend that we are observing.
Yeah, I mean, as a matter of fact, I remember seeing a World Trade Center building in Zurich almost 30 years ago.
Yes.
You know, so this isn't new, and I remember one of the first World Trade Centers.
Whole thing coming back, but we are seeing a rise of it. World Trade Centers at the airports were not happening now, but now this year we saw 10 of them coming live.
So, Khair, you and I need to get on a call outside the panel.
Yes, I'm interested in the Goa one.
Just to add a perspective from a developer, new age developer, in terms of how we are looking at this. As a part of our Connect with Top 50, we are talking to all top corporate occupiers to understand how are they viewing their real estate strategy moving forward. I think one thing is very clear, that work from home or work from anywhere will be here and will be part of the mix. So now the intensity of that may vary. We hear 15, 20, 25%. The real number will be out only after vaccination. So I think till then everybody will keep on guessing. But the way we are looking at this is, it will be an important part of the mix, with work from office still playing a dominant role. And we have been now in discussions with a lot of clients who are talking about, we want to design new office space where you have to assume 30-35% people will work from home at any given point in time. And with that in mind, as I think Khair said, as Aman, you are talking about, there is a lot of time that is being invested in making offices future proof, in a sense, because these 25-30% people doesn't mean they will never come to the office, right? They will come to office at some point in time in a week or in a month. So how do you gear up the office infrastructure that can provide that kind of flexibility to this kind of a mix between work from office, work from home, work from anywhere? And that's where at least we are offering design, build, managed office solution to corporate occupiers, and we are investing a lot of time with them on that particular front.
Yeah.
None of them have told me, or if you look at the facts, even global IT companies or domestic IT companies, none of them have renegotiated or let go their portfolio materially. In fact, they have renewed their pre-commitments and the existing leases, right? So the work from office will continue, but the nature of office is going to change significantly.
Yeah. Rishi,
very well said, Rishi.
Honest, I actually beg to differ from what you are saying, that work from home is here to stay. I'm such a believer in humans and as social animals. I think it's a very temporary thing. I have seen over this period of time, this lockdown, while that there are companies who have come to us, have discussed with us, that they're going to increase the workspace. We've seen the trend of a business center or co-working spaces where the workspace came from 100 square feet, came down to 32 or less than 30 square feet. And again, we are seeing a revival of more, because of social distancing. Again, the same workspace, the density is actually now getting lower. Earlier it was getting, so it's a trend, but the requirement of space is there for sure. Yes, we have seen a trend wherein a lot of offices are looking at multiple locations. The hub and spoke model is being adopted because they want to be more closer to the employees and want to create that convenience. We are seeing an increase in that, but at the same time, we are seeing that there's an opportunity for everything there. There are companies which are coming to us, which are looking for large floor plates, which are looking for entire towers. I'm talking about Chandigarh, probably that is very close to the airport. That is just 1 kilometer from the airport. Where prime location, so probably we have companies coming to us asking for complete towers or complete floor plates. When we are looking at good WTC GiftCity, which is a smart city, we are looking at smaller spaces being looked at by the financial companies. When we're looking at Noida, we're looking at complete towers of 1.2 million square feet being leased out. When we are looking at CBD, we're looking at companies which are coming for nothing less than 1 lakh. That's the lowest which is coming to us. And they're asking for larger floor plates. So this is a trend. It's a very mixed trend which is happening right now. I mean, we can't really put our finger that this is what is happening. There's a lot, there's a lot of chaos, there's a lot of thinking that companies are rethinking, but they're not rethinking in terms of downsizing. What they have, they want to retain that, and they also want to look at something which is new.
Yeah.
They might have kept their expansion plans on a hold, but it's a temporary hold that they have kept.
Yeah, no, I totally agree. I think I am very bullish that the demand for office space is here to stay and will only increase.
Absolutely.
I think the nature of the demand and the mix is going to change, which is what all of us will need to adapt to some of these new realities. Some of these trends will persist. The magnitude is a question mark. We will figure that out as we go along.
You know what? When I'm looking at the demand, I'm not just talking about demand from the occupiers itself, but I'm also looking from the investors. There's such a huge demand for office space, which is coming up. I mean, we've seen that. That is the reason why we are actually now looking at a launch of World Trade Center CBD Part 2, Phase 2 of CBD. We're looking at a launch of Phase 2 of a Dwarka Express project. We're looking at a launch of a World Trade Center Faridabad. And we're not waiting for COVID to end. We're actually looking at this time because we both have the investors, we have the REIT players, investors, we have the occupiers also, the end users also there. So it's a market which is actually right now full of opportunities, and it depends upon what you have to offer, the flexibility of what you are to offer.
Correct. So let me get Vibhor on this. There, Vibhor, as you hear, Khair, and and also Rishi had commented as well. So when you look at the perspective that real estate commercial also is a bit of there's a gestation between the creation of the supply effectively on that. So how do you read this in terms of two trends? One, in terms of the distributed office point, which we partly touched as well, in terms of moving to suburbs, having smaller CBD offices, having more than one office as well in that, from a concentration risk and other perspective, and also this part of it to say that we are more in the now situation, while we have to look at some of the recovery aspects also which are being projected as well. So how do you see this from an NCR market point of view, if you were to just bring to closer to from an NCR perspective?
Sure, Neeraj. So I think Rishi, Khair, both of you have brought out good pointers. I'll just take a step back and just highlight 2 pointers. The way I read this situation, there are 2 factors which are primarily affecting commercial real estate. One is the structural, and second is cyclical. So the structural aspect is the work from home, which we just debated on, and the cyclical is the job losses. So on the structural aspect, what we see, and as Rishi pointed out, that yes, going forward, there will be a hybrid model which will be coming in. However, the demand, so it can be any percentage, which is 5% to 20% or 25%. But that may get negated from the factors of the social distancing and from a larger office, redesigning of office spaces. The factor which will, depending upon individual economies and how it shapes up, Asia Pacific will shape up differently, US will differently. The cyclical factor of the job losses, that will also have some bearing on the office space market. I think both these factors need to be considered when we look at the demand from the office space perspective. Second, from the Neeraj, to your question on the hub and spoke or the moving to the suburbs and taking up spaces, yes, that is definitely being evaluated by a lot of companies, and we are seeing action as Rishi's couple of assets in the CBD and the areas. We and similar assets, we are seeing the traction there. The only challenge there is that we don't have too much of a good quality supply for a hub and spoke model. So when you say that a company, multinational company or a global corporate, Indian corporate, they want a quality spaces, you have to look at, say, Gurgaon CBD or Noida CBD or SBD of Gurgaon or a Noida SBD. And when you want to say look at Delhi, you have a very limited supply quality. So although companies may want to do hub and spoke, but the challenge from a good quality supply may come into a question. So that's where I read it. Recovery point of view, as I mentioned earlier, we are seeing a strong recovery coming up post June and July, and more news from corporates are coming in from their long-term planning. Earlier, there were knee-jerk reactions to look at terminations or having some thoughts around it. Now it's more of a structured approach, and companies and corporates, they have realized that yes, offices are here to stay, and from their perspective, they're planning their real estate in a more structured manner.
Okay, sure. Rishi, if I come to you in terms of the demand-supply equation, from an NCR perspective, as a major play that you are also focusing on, in terms of how are you reading this in terms of the near-term trends of absorption, and also in that, if you go a little beyond the commercial office space as well, for other segments, how do you see this from an absorption trend point of view in the next, let's say, 12 to 24 months?
Yeah, thanks, Neeraj. I think the good news, as all of us said, and as Vibhor also pointed out, that starting second half of quarter two of this fiscal, we measure it with the on the ground pulse. The enquiries, the site visits have significantly gone up. Okay. The bad news is in NCR still, this is directly correlated to the COVID graph. The COVID numbers that you see on a day-to-day basis on newspaper, the inquiries and site visits varies. And the other bad news is even today the decision making time is longer. Now, my personal assessment is that all of us will need to brace for more volatility and longer lead time till COVID situation in the city stabilizes and there is more clarity on vaccine. But the trend is clearly upwards. That's very clear, which we are observing. I also strongly believe from a demand supply perspective that there will be post COVID, the entire flight for quality and premium to quality towards developer owned and managed asset will become even more pertinent and visible, which was not so much differentiated earlier in the pre-COVID era. And the developers who are really focusing on good quality asset, providing good experience, well connected, really focusing on the well-being. I was reading an article which talked about building health-centric communities in your offices, right? Those are the offices which will pick up and capture this market share moving forward. The other thing I'm observing is in all our in the market, what is happening is all the top corporate occupiers are very closely evaluating the strength of the balance sheet of respective developers and taking a much closer view on who has got the strength to navigate through pandemic if it persists for a longer duration. So when you factor all of this in, I think the long and short of it is the trend is upward. It will remain more volatile and decision making will be relatively more longer in next, I would say, couple of quarters. And beyond that, I think the demand for good quality assets, which are developer owned and managed, will significantly pick up, and they would emerge as winners in Delhi NCR. That's how I see the space.
Agree. I think we've lost Neeraj again.
So back to Aman as our moderator.
Yeah, listen. I'm happy to punch in. I mean, sometimes you do get into these parts. I've been in this position where Neeraj is on numerous occasions. So
Yeah.
uh, I've assumed the role of his deputy. So great. I think. Listen, one. I was on one of the other seminars, and we all talked about work from home and how office market is impacted, and how work from home is the future. Clearly, trends that Rishi that you were talking about, and before what you just talked about, and Gaurav also made the same comment that commercial real estate market is here to stay. I have been in the industry over 25 years. I've worked in 5 different countries, looked at the trends in different countries. Commercial office market is possibly one of the most stable real estate asset classes because demand for workspace in India particularly isn't going down anytime soon. India continues to be the largest outsourced IT market. That piece of our outsourcing isn't dying down. Our financial services sector is becoming stronger. Our manufacturing sector is becoming stronger. So there is no doubt in my mind that office space requirement will increase. As a matter of fact, because of COVID, it will not decrease; it will increase because of the issues that Vibhor and Khair that you pointed out. It's really about in NCR, it's really about getting very good quality, A-class quality buildings that we don't have. We have very few. There's a few in AeroCity. There are, of course, Max has done some great work. There are a couple of them in Delhi. There's obviously a lot of good developments in Gurgaon. But that's just not enough. I think Delhi particularly is in need of large commercial triple A quality assets. It's the capital of the country. It deserves to have triple A assets and not even A class assets. And that is one area. So lack of, in my view, it has never been about demand in NCR. It's always been about supply.
Yeah.
And our history of strata sold office has been the biggest reason why good quality supply never really happened in NCR region. So it is a supply starved market. It continues to be that. And if because of COVID, if developers find opportunities to build real estate in the national capital region, then this, in my view, will be the biggest opportunity in the last 20 for the next 20 years. Land isn't being there is no new land being generated. Land is in short supply in Delhi in prime areas. That will always remain the same. Delhi's infrastructure is improving. Airports are better. Railway stations are becoming better. Road infrastructure is improving. Connectivity to the world is improving. So there are many things that are working in favor of NCR. The one aspect is because the investment into real estate, into organized real estate, has largely focused on a dependency on IT sector. So what we found in the last 15 years is that the majority of capital has found its way into what I call low hanging fruit. You can go lease 500,000 square feet to an average tenant. The size of tenancy in South is very large, and Delhi, the size of tenancy is very small. It also makes it less risky. So from a risk perspective, a fully leased out building in Connaught Place or in Noida is less risky than a fully leased out building in the outskirts of Bangalore, because you probably in an entire building of 1 million square feet you have 2 tenants. One tenant vacates, 50% vacancy, right? So there is that riskiness and that skewness in that market. And I think for the longest period of time, Delhi NCR has suffered because of highly good quality supply. And I think that is the need of the hour. I think we need more developers like Max, like several others who are now finding. I know recently RMZ acquired some property and they're looking at development opportunities here. I clearly see NCR as a huge upside, and I foresee a hockey stick type of demand. Almost 2 years ago, we did a market research with a very large consulting firm on where the demand side is, if the location in NCR was the right location. And we actually did a specific study with respect to AeroCity. We found that there was 6 million square feet of demand if product was available in that 1 year. And this is based on our actual meetings, one of our, reaching out to the CXO of major corporations. And the reason we were not in Delhi is because there wasn't enough space in Delhi. There was just not supply. So they chose to do it somewhere else. So I find, Delhi NCR market is a great opportunity for investors to put their capital to work, for developers to develop some great quality buildings.
Sure. And Aman, just to substantiate, what you just mentioned, pre-COVID, average vacancy in Delhi NCR is around about 20 to 25 odd percent, which is like, I consider the entire NCR, including the developer owned and the strata sold assets. But the moment I only look at the developer owned assets, at places the vacancy level goes below 5%. So that itself talks about that why there is such a high demand for the single owned assets, and this COVID will further accelerate this, which will add to the quality of the assets. So giving some data points to what you just said.
The World Trade Center actually is on a sale and lease model. We do have strata sale, but we have actually created a trust for each floor, each tower, and we've got a mother trust which takes care of all of these trusts, these floor wise, so that we are able to take care of the tenants as well as the investors. And it has been since 2016. That's when 2016 the World Trade Center Noida came up, got occupied. Before it was ready, we were 100% occupied and leased. We have not faced a problem, whether it came to investments or whether it came to occupiers or negotiating with the investors. And there are ways, and we, being a WTC, we definitely are a AAA building, because we have certain standards and compliances to manage. We've not faced any problem because we've taken the necessary steps which are required. Sure. Now we have World Trade Center Noida CPD, we have World Trade Center Faridabad coming up, World Trade Center Lucknow coming up. Chandigarh is already there. GiftCity is already leased out and ready and occupied. We have not faced that problem, and developers are becoming very, very conscious of that fact. Even if there is a strata sale which is happening, they are taking the necessary steps so that the occupiers, who are the actual users, would not have to face any problem. So it would be wrong to say that strata sale buildings would not be, would have a problem. No, there are steps which developers are actually taking, like we have taken. We've created a mother trust, and then we've created some sub trusts to take care of that.
No, Khair, absolutely. In fact, WTC has done it differently, and the fact of the matter is that you still have skin in the game and you're taking care of it. It was more about that, there are still developers who have sold it and left it to the investors to fetch for their own. So I think that the discussion is more about that. But for WTC, definitely, as a organization, you still remain the single point of contact for the clients, which is absolutely well said.
We have a question here. We'll have to, we have few questions also from the audience. Khair, you mentioned about, the strata sales and etc. We have a question where they ask that investors are now looking at rent yielding assets rather than the greenfield or brownfield. First question is why this shift, and second is, do Indian cities have that many rent yielding assets in commercial space?
See, first I'll answer the second part of the question. I really believe that India has a lot to offer, whether it's tier 1 cities, that is the 7 metropolis cities, or whether it is the tier 2 cities. We are present. I've got 32 World Trade Centers at different stages of development, and all the 7 metros have it, as well as tier 2 cities like Gandhinagar, Chandigarh, now Faridabad. And we are actually seeing, because of the growth corridors, like the DMIC corridor and the Amritsar, Kolkata, Delhi corridor, there are a lot of investments and government initiatives which are actually promoting these cities. There are 48 industrial nodes which are coming up on the DMIC and the AKDIC corridor. So we are seeing huge potential in these cities, both from an international perspective as well as from the domestic perspective. So secondly, when we are looking at commercial, and World Trade Center is largely a mixed use development. I mean, we have office space, we have conferences, we've got meeting rooms, we have got hospitality, we even have residential, we've got a we even have industrial and warehousing, and World Trade Center Noida is one such example. It is the world's largest World Trade Center with this kind of mixed use. So we are seeing that, yes, that now the new investment that even we, for that matter, are looking at is we're making ourselves REIT ready. Even, I mean, we were looking at to be having our own REIT this year, but because of COVID, we've delayed it. Now we're actually preparing ourselves and preparing our assets as REIT ready assets. Overall, we are developing more than 50 million square feet of real estate. And it could be growing. And I'm talking about only one partner, which is Viridian, which is the preferred partner of World Trade Center, who's developing 13 World Trade Centers across 11 states of India. Them developing 50 million square feet of office space and 20 million square feet of retail space. And they are preparing themselves to be REIT ready. And there, there are various aspects which are actually being done to develop their assets there. Like World Trade Center Noida is 4.2 million square feet, 2.1 million square feet is ready, leased out, and a part of the REIT asset. Then REIT ready asset, that is. Then World Trade Center Chandigarh is at a stage which could get REIT ready. World Trade Center GiftCity is again 1.5 million square feet with the potential to go 6 million square feet. And right now, the first phase is 1.5 million square feet. Day one, before we got the OC, the 2 towers were leased out. 22 leases were already done during the lockdown. So, very REIT-ready assets, and that is the new way. One, it's a good option for, for the investors are looking at transparency. The investors are looking at the developer is looking for funds, or for looking for construction assets which are at the construction stage. So it's a beautiful way of actually having that connect done, and we as World Trade Center are
yeah, we'll take one quick question and I'll pose it to all our other speakers.
Can I just add, I think to your first question, just I'll take 30 seconds. One quick data point to answer that question from the audience. If you look at the data from 2010-11 to current, right? Yes, initially there was large proportion of investment was going on rent yielding pre-leased asset. Towards the later part, 2017-18, with a lot of changes that happened in India, right? With a lot of regulatory changes and so on and so forth, the investors' confidence in greenfield and brownfield increased. In the post-COVID world, what we are observing is there is a temporary blip with respect to people taking a pause. But in our one-on-one discussions with a lot of investors, I think the appetite for greenfield and brownfield is here to stay, and it will revive back. Right? It's just a temporary blip, and that trend will come back.
I think just the last 10 seconds on that is that, as I said earlier, there are, the new funds are looking to set up development of core platforms. So that, that sentiment is still there. So it's not completely only ready-made.
Okay. So it's not just rent yielding, brownfield and greenfield will again be in demand. Neeraj is back here with us. Neeraj, can I ask one question to our moderator? We have a audience question. While others have spoken about how commercial spaces are going to reinvent themselves, hospitality you mentioned about how hotels are going to have commercial centers within them. Now, one of our audience asked, is flexi spaces the new normal for office spaces?
No, sure. So, yeah, from a office space perspective, I think what we are seeing is a mixed trend right now. So one, certainly a trend that people are looking to see that more and more they've got certain flex available, whether it is from a perspective of a combination of the main office and a satellite office, getting to be increased around it. The second trend being that, in the satellite office also to have a flex available for having a rotational policy, especially for the people that are being planned, like people who are doing more homogeneous kind of jobs to come in on a rotational basis to the office space coming in as a more of a collaborative, and also a space wherein you get together for creating culture, relationship, and meetings and other aspects of it. So, people are trying to see that, and these differs from industry to industry. So, I mean, there are industries which are, requiring more culture, more collaboration to be done, because of the fact that, that they are more like, from a commercial perspective, they have those kind of bent of requirement. So they are the ones who are kind of looking at a more flex space to come in there. But in terms of some of these requirements are also they will pan out. The fact that we would look at a post-vaccine world hopefully soon enough around it. So there would be a revert back, as well on some of these aspects there. But I would say that the our discussions, we've done with multiple of our clients. We're supporting several of them as well, on their real estate strategy and also the approach they're taking on it. Some of this is like a percentage of that, could be anything between 10 to 25%, could be a permanent trend as well for some of the industries which are more service oriented. There this would be a higher percentage of their focus around it there.
Okay, that's great. I think we had very varied views from all our speakers. Neeraj, you'll agree. We got some very good inputs, and I think by going by, we have many questions more, but I think because of the time, but the general sentiment is that commercial spaces, yes, everyone is going to go back to offices as soon as possible. Maybe commercial offices will change their face, they will reinvent themselves, but they are here to stay. So, Neeraj, if you can just summarize and we will close the panel.
No, thanks very much, and my apologies. I think I was impacted by the COVID the maximum in this session at the current time, and thanks so much for supporting on it there. Clearly, I mean, I was able to hear a lot of stuff. So I think as Sapna also mentioned on it, I think we if we look at the discussion today, the perspective really stands out that commercial offices, there was a near term, or let's say a kind of an initial reaction by people, where the talk was much more about termination and also waivers and renegotiation aspect of it. I think that is dying down or reducing significantly. And as Rishi mentioned, there is a positivity in terms of some of the leases that have been signed during the COVID period, and there are other Khair had kind of very nicely illustrated in terms of the opportunity that she sees on the tier 2 cities, and outside of Delhi also, and within the Delhi as well, in terms of the overall NCR market, aspect of it. So I think the broader consensus largely is that the office spaces are here to stay. Major offices are also required because of the densification trend. Potentially for service-oriented companies, the requirements would be more only in terms of the office space aspect of it, and then also the fact that I think some of the people are actually looking at this to say that how do we relook at the model, and also see that when the people are coming to our offices, we make them give them even a more social environment, more collaborative environment as they come out of the post-vaccine aspect of it there. So given the while there are definitely diverse views given the current situation, because we have some uncertainty around the vaccine aspect of it there, but there are green shoots. There is a positivity for many players are currently talking about a very short-term possibility around it. So we wish that everything goes well soon, and then all of us are back in the office and are able to collaborate and able to grow our businesses together. With that, I mean, thanks everyone. Thanks.
Thank you so much.
Thanks all
Thanks
the
to all
panelists
our
for
speakers for sharing your views. For Neeraj,